Everyone to the session today. My name is David Girardi. I'm with Forma AI, and I'll be hosting the panel. And so I just want to give a bit of background on what we're going to talk about today and then introduce our panelists. So again, today's session is about sales comp analytics. And as we know, it's not just about tracking payouts, but the ultimate goal is to drive behavior that results in better sales and revenue outcomes. And so if we don't have the right data and insights, obviously there's this complication where we risk misaligning incentives, which results in lost revenue. And so the panel today is going to talk and give specific examples about how they use sales comp analytics in their past to optimize performance, and kind of describe in detail and give real world life examples of how they've done that in the past. And so with that, I'd like to have our panel introduce themselves, and I'll start with Maria.
Hi, everyone. My name is Maria Ochko-Knat, and I am currently the VP of Sales Planning and Compensation and Performance at Workiva, a SaaS tech company in the regulatory reporting space.
Great. And Jeff?
Jeff Piper here. Recently started with BMC, background in sales incentive compensation, leading the team here. Previously at places like eBay, PayPal, Twilio, Alight, so forth.
Great. And Nabil?
Hi, everyone. Nabil Alazam, founder and CEO of Forma AI. Been in sales comp career my entire life, and I started in management consulting doing Salesforce effectiveness prior to founding Forma. Super excited to dig in today.
Great. And with that, I'll start out kind of with a question that will form the base of everything we talk about after that during this next hour. But essentially, I wanted to pose to the panel, can you describe to me the essential KPIs that you would advise someone to be monitoring on a regular basis to optimize, comp effectiveness?
I can jump in on this one, and then turn it over to Maria. For me, it's the classic sales performance distribution curve. What does good, on target, or on plan look like in terms of quota attainment? Obviously, it can vary from company to company and even some seller groups within the company. But what percentage of the sellers are considered at or above plan? What can we learn about those sellers and how they're performing within the plan? Are they above plan? Are they below plan? Do we have a skills gap maybe among some of our sellers? Do we have a territory composition issue? Maybe we have a quota misalignment issue. Quotas are too high, quotas are too low. They don't align to the market conditions or product readiness or customer readiness, whatever the case may be. Maybe sometimes it's related to tenure. For me, it could be any number of questions that spark a deeper dive into some of the simpler sales performance distribution illustration. This is just one example of many, but it has been noted here. The key for me is to ensure that the metrics are aligned to the business goals and the company strategy, and it really does no good to measure something that doesn't align or shed light on whether the plan and the sellers are headed towards and behaving in ways that support the overall company strategy. That's kind of my perspective. The simple, classic sales performance distribution.
And that's I think that's pivotal for everybody, and hopefully everybody on the call is aligned to that. I know that depending on the audience, right, and the people who are trying to dive in to what's not working and what's working may have a different perspective. So what I found in my experience and even in current role is those metrics become pretty wide. You go from 3, let's say maybe the cost of comp, the distribution, payout distribution, pay mix, that always explodes, right? 15, 20, 25 metrics. So you may have win rate, average deal size, pipeline coverage model, retention rate, billings, earnings at risk, right? And it just grows and grows and grows. And all of a sudden, you're now handing that to the exec staff and having a conversation, but they don't really know where to look, right? All we see is there's 20, 30 metrics on the screen, and how the heck are we supposed to dive into all of the red, yellow, orange, green signals that are there? So for me, it's about looking, I think organizations, when they use any metrics, right, even starting with something like, the curve, or any of the metrics I just named off, everybody's concerned with, top performers, making sure we keep them happy. Bottom performers, that's easy, right? We create some sort of strategy around that. But the most important area to target, where I think most organizations have the most opportunity, is that middle group, right? So the middle folks that comfortably sit between 50, 70% every time, right? Every plan period. what can you do? What metrics can you focus on to really get them going, get them moving? So first you identify that through those effectiveness metrics, Jeff, like you mentioned, then you start diving into the other metrics. So maybe for that middle group, we look at something we can get our hands on, right? Maybe it's win rate, maybe it's coverage ratio, maybe it's an enablement metric, but whatever it is, to start figuring out how do we get just a little bit of improvement from that middle group every time? Because if you can do that, that has the most impact on the organization. Top reps will always be taken care of, right? As we use metrics and go forward, we can analyze them, see what works better. Hopefully what you learn from that can contribute to that middle group, but really honing in on whatever metrics you're using, whatever you're in charge of, that middle group is what you're really trying to target for improvement.
Take those guys and move them up. Yep.
Yep. Move them up.
Great.
And in terms of some of the things, Jeff, you highlighted this in terms of things like tenure, things like perhaps geography and location. Just to give the audience more of a description, are you basically cutting your distributions based on all of these variables that you laid out, essentially?
Not necessarily. It just could be as you start looking at some of that segmentation in performance, you kind of wonder, why is it this middle group was always the middle group, right? And to Maria's point, what are we doing to move them to that top tier of excellence? What differentiates those folks that are on the bottom from the folks that are in the middle and the folks on the top? And it could be any number of things, right? It could be just the geography. It could be, golly, these folks on the bottom have only been here for 6-12 months, and we found through our data that it takes 12 months to ramp, 12 months to ramp up into effectiveness, perhaps. Maybe the products that a particular group of sellers are targeted to sell isn't quite ready, right? Doesn't have the feature set. The customers quite aren't ready for it. It could be any number of things, but without looking and kind of identifying, I've got a few different buckets of sellers at different phases or stages of performance. How do I know, right? And I think if I can get an understanding of who's where, then I can start diving a little deeper into what differentiates each of these groups. And then to Maria's point, you can dive even deeper than that. And before you know it, you've got this whole host of analytics, and where do I start? And some of those are appropriate for the body. Some of them are appropriate for each one of the tiers. Some of them are appropriate for just different seller groups within your broader sales organization.
I think what's interesting there too is if you're doing it right, what you see in that initial curve should not be a surprise.
Right.
The problem is when there is a surprise, because things like tenure, things like product fit, right? All of those ideally should have been accounted for. They're known. Think our team's doing it right. Start of the year, we plan for those things. We have different models around tenure expectations, ramp time, we have formulas, and we like to think we're doing it right. And then if those curves start coming out and there's a surprise, now all of a sudden we didn't think of something. We had a blind spot. We didn't do it right. We can talk about what those blind spots are in more detail, but that's my general consensus, right? Is it shouldn't surprise you what that curve is showing. And when it does surprise you, that's when you sort of have to stop, get everybody's attention and say, oops, where's our gap that we didn't know
we missed something. Yeah, exactly.
I mean, maybe and there's a question that came in about startups, right? So you asked the question of how different is it for startups? And for me, it's startups being kind of the definition of very high growth, 100% plus year-over-year type of growth where things are changing so fast. But it can apply to any organization where I think what is true then is your ability to forecast out what sales are in the following year becomes harder and harder because the delta is just so large. And so quota setting accuracy becomes something that's critical, right? All of these performance, attainment distributions are predicated on us being able to actually set the right quota. And when it's an established business, there's many years of kind of robust testing and validation of that quota setting methodology. It's less of a critical metric, but in that startup world, in that high growth world where things are changing so fast, I think having a laser focus on how accurate are we in setting quota and where there are biases is, I would say, a pretty critical metric from what we've seen, what I've seen. Yeah.
I think it too adds to adding in that flavor of customer and deal quality metrics right from the start, right? Because you have to know what types of deals you're closing, right? Are they going to lead to churn just inherently, right? That's part of your business model. Are there high service costs? Is there low profitability? The sooner you can start get a grasp on that, it helps kind of have that ripple effect for all of the rest of the planning that, you know, then gets done a year or 2 years out, and you can incentivize that long-term value potentially.
100%.
And could I ask a follow-up to the panel in terms of measuring these essential KPIs? At what point of the year are you essentially putting, like, are you measuring them after month one? Are you guys waiting for an entire quarter to flow through? You know, when do you look at one of these distribution curves or secondary metrics, as Maria mentioned, and start really taking action?
Those people are kind of chiming or filling in. I can chime in what we do. So it used to be the normal, hey, we'll look every quarter to kind of figure it out, right? Okay, look at the middle group, start diving into the metrics. Now what's changed is we have built a pretty robust thing, right? Real-time data flowing into real-time dashboards. We look at curves, we look at those metrics I mentioned, right? ADS coverage ratios, pipeline excellence. We have all sorts of things to accommodate and create signals. Of course, people can't live in signals every day. Those change. So I would say every day is probably too much. But I don't think there's anything wrong with monthly. I think people don't potentially have the capacity or the tools to look at things monthly. But once you can get those together, if you start looking monthly, you can get ahead of certain behaviors. You can start sensing out, you know, any issues potentially with the seller, a territory, a quota, a product, whatever it may be. More likely, you're not going to be the only one that knows that. The rest of the organization is also going to be feeling some sort of gap that's occurred. And they're asking for that story to be filled in as to why. And so you're going to champion that story by diving into those metrics and then sharing the why. You can also throw out red flags and caution tape. One thing I learned being part of companies that are doing really well is when you're doing really well, nobody really wants to talk about the middle. Nobody wants to talk about the orange flags or yellow flags, right? Because things are going well. Let's not rock the boat. It's important to keep creating the stories around those flags. When things are bad, everything needs to be scrutinized, but when things are going well, it's easy to sort of just let it lie. And then everybody has inflection points and downtimes, and they will come, and you will have to answer those questions. And instead of panic and rash decisions and decisions around quotas and comp and all the other things you can do, you can say, hey, we built this up, right? We know where the gaps are. We know how to address them. We can at least start chipping away at this problem and not go into panic mode. So the sooner you can look at the data, the better. I think the experience for me has been, you know, you do quarterly reviews, roundtables, try to get the story. But if you can do monthly, I think that's suited us well. And I know some of my peers in this space, it's a good conversation to start, you know, looking at that at least monthly for folks.
Great. I think this is a good time to move on kind of to the next topic I wanted to cover. So now that we've established what are the core metrics and KPIs that we're measuring, you know, can I'll ask this open to the panel. Can you describe some examples in your past where you've then, you know, identified something in those core KPIs and then you've used that to then enact some sort of change to optimize the plan?
You know, I've got an example of real-time plan adjustments from the past. A few years ago, the team had direction from the executive leadership team that we would need more deferred revenue on the books. Our CFO was pretty passionate about this and had some particular interest in leveraging the plan to drive some behavior towards that. So our solution was just to provide special incentives to our sellers for long-term deals. Obviously, the longer the deal, the larger the quota credit. That was our approach. It was clear after a couple of quarters that the strategy was working wonderfully. We had more deferred revenues from long-term contracts than we'd ever had before. But an offhanded comment from one of our sales comp governance committee members had us questioning the success. They said, yes, we have significantly more long-term contracts and future book revenues, but one of these other metrics that we have is margin, and we're seeing some margin pressures that we didn't used to see. A deeper dive into this found that these margin pressures were coming from a very specific group of our sellers from the SMB team. Turns out that the customers in this space didn't consume our products and services the same way that other customers we had did. Many were smaller startups, bootstrapping a small but quickly growing organization. They struggled to fund payroll, let alone a 3-year engagement with our company. But hey, if the price is right, they'd figure it out. The sellers, motivated by the comp plan that we had in front of them, were essentially giving away anything they could to close the deal. Right? It was in their best interest to do so. That was the behavior that we were driving, unintended consequence. It turned out we didn't want some of our customers on long-term deals, and frankly, neither did they. So after some changes to oversight policy and the plan language, we updated the plan real time mid-year to exclude that particular component from the SMB seller team. It's kind of an example of using some of the data that we had, some of the metrics that we'd set forth for ourselves, and kind of keeping a pulse on those and making adjustments as needed.
Yeah. Yeah, I've something similar about like misaligned performance, right, to pay correlation. So one metric that I love and I've used for a number of years is how much of the commission or incentive pay is coming from the actual, we'll say the quota credit perspective, right? Mm-hmm. So you have the core part of the business that is, you know, whatever your focus is, network, that's SNS. We obviously want the most behavior to come from that, the most incentive, but there's other things, right? We all have spiffs, we all have add-on contest incentives, whatever it is. And one thing that we're finding is that we have these, I love the metric or the analytics where you do the correlation between OT and the type of pay. And you look at how much of the target pay has been reached, right, and quota attainment. What we were finding is there were spikes, right? So there were folks that were sitting in like the 40, 50, 60th percentile that were earning much more than their OT target. Mm-hmm. Well, right, you hone in, you realize, hey, I can look at the incentive earning group, and they're all coming from a spiff, a kicker, right? Things that just aren't the core behavior that we want to drive. And so it was funny. There's these, now people get with spiffs. They're supposed to be temporary. You're not supposed to get attached. Mm-hmm. Sellers get attached. Mm-hmm. Second you take one away, they're like, where's the next one to replace it?
It gives, yeah.
Yeah. And so what we found, right, is we just couldn't move that middle along because they were actually making money off of these non-quota credit behaviors. And so we removed those, right? But we invested that money back into the right behavior. So that's always a mantra for me, right? I don't mind cutting cost if needed, but let's not do it, right? Let's always reallocate, hopefully, to top performers or to the behavior that we want to drive. So we reallocated it back to the comp plan. And the people who are great sellers didn't complain. And those that maybe weren't as high performing obviously had some complaints, but it got rid of some of that disparity. And so that's a great metric if you're not using that, comparing OT payout, right, to quota attainment payout, making sure that the earnings are coming from where you expect as a business and getting the expected ROI on that dollar.
Yeah, I mean I love that metric, and it's the only way you're going to continue refining your pay curves, which is a really big part of your core comp plan and or whatever, you know, ancillary like spiffs or adjustments that you're applying onto it. But you know, what's interesting to me is if you're not seeing reps game your comp plan, they probably don't understand it, right? Like that is I guarantee it. And it's one of those things where you see this in time and time again. Reps are going to game it. They're going to game it because if you have the right people, that's what they're being paid to optimize. That's it. You want them to. Exactly. Yeah. And so, you know, the way that again, in terms of like using the data and the metrics, it's like ideally whenever you're creating a comp plan, you're kind of creating the edge cases of gaming that are going to result potentially in less than ideal outcomes, and then tracking against that. So I mean, yeah, and you see this all the time when you have a spiff that like adjusts the multiplier credit rule of the core plan. Now you have to pay attention to that pay, like earnings at a pay curve level, right? You have to track that. You have to track pricing or discounting. If you're rolling at a comp structure that puts two incentives at odds against each other, yeah, I mean, if you're on top of it, you can course correct and react, and I think it's very powerful. But
in the examples that all of you gave, you know, is there anything that you can do before the tracking period to kind of mitigate against this gaming problem?
I think, well, a problem is in loose terms, right? I want my top performers to game a plan. I just want to do it the way that I've created this company.
Yeah, within those rules, right?
Yeah, follow the rules. I think that what it takes is just getting multiple voices. So an example, when I go through changes, I'm typically the one along with my team who's presenting options, right? Observations, everything that we've dealt through, right, over the last 6 months, 9 months. The best thing you can do is get people in early. Don't have these conversations siloed with just the CSO or CRO and yourself. Bring in other people. I bring in all of my VPs, all of my, I usually float all plan design change ideas through the senior directors, even at that level on the sales side. And I want their feedback because they're going to be really honest. They're going to tell me if it just absolutely sucks, or if, hey, this is great and people are going to think they can make a lot of money off of this, or this is kind of icing on the cake for them. Don't be afraid of that. I find these conversations too much in my past and for my consulting life and in my corporate life. We do things too much in silos. And everything I do when I walk into a place, I'm always like, have you surveyed reps lately? Have you surveyed sales management lately? Have you surveyed other people that are part of Excellence Committee, right? Maybe HR, finance, what do they deal with? And if the answer is no, it's usually met with a one of two. No, but we should. That sounds like a great idea. Let's do it. You can get all sorts of insights from that. Or B, no, we don't want people to know we're questioning. We don't want people to know that we're guessing. We know what we're doing. And that's just unfortunately a wall of vulnerability you have to knock down. Because I tell people a lot of times, I like to think I have some knowledge in this space. I built a career obviously in this world, but the team can feed me the information I need to know, right? They give me that fuel. So getting those insights ahead of time as you're floating around ideas just helps showcase how strong the argument needs to be or new risks that you didn't think about for the business. And those can be really great. It's not to say that you're not going to do something that they might be against, but you'll be able to build up that story, bring everybody in, get the buy-in, get the stakeholder awareness and approval, and then be able to articulate again those risks and benefits without surprises.
Yeah, I had a manager not too many years back who's actually been a contributor here on the Forma AI panel, who was a strong advocate of the sales comp field advisory councils, right? This is a smaller group collection of some of your more maybe influential, notable, successful individual sellers, maybe one or two managers, solution architects, sales engineers, right? This small collection, a dozen or so. And this was a great forum to kind of bounce ideas. And we've got this don't want to use that word problem. We've got an opportunity here to improve things, or we're seeing some behaviors that we were not expecting. You're coming from varied backgrounds, different industries, varying levels of success. You're here with us now at this company. We have an idea, or we have a couple of ideas, or we're looking for some feedback from you. And this is a great opportunity to work through this particular council some ideas. And then again, to Marie's point, they're not a decision-making body, but at least they feel that they've had an opportunity to contribute. And when the time comes to roll out a change, a campaign, a new plan, whatever the case may be, ideally you've got a few advocates, right? These are folks that were part of that process or in helping solution some things. And they help to champion when it comes time to rolling out new programs and whatnot.
And I'd love to address, maybe I saw Devon, maybe say the name wrong, so I apologize. Diptanu's and Les's questions. I think they're kind of combined, and I'll clarify what I mean by that. So one thing that I always encounter, my team always encounters, is the question out there is, how do you measure ROI for special incentive programs? And the other one is, right, how do you focus on which layer of the metric to look at and tie into? Everybody wants everything to be important, right? So when everything's important, nothing's important. That's my mantra. People that work with me get sick of me saying that. So you need to establish a path of what good spiffs look like, or special contests. And there's a way to go about that, right? Is you look at what's truly important in that time. So I had a lot of ideas thrown at me for Q1. We deemed that half of those, right, are more appropriate for Q2, Q3, Q4, right? We don't need to do them all at once right now. Then there's too many, right? There's 4, 5, 6. So let's hone in on what's going to make the most impact. A lot of times people throw spiffs out in the universe, and then they're like, oh, that was the end result. That was cool. We paid a bunch of money and we hope we did good. So I'll share just a story of the bad of that and the good of that. So what bad looks like is we had an incentive program where we focused on getting a high Q2. Well, we were on semi-annual plans. So Q2 by nature will be high anyway, because that's when people are reading and getting inflection points, accelerators. But nonetheless, we wanted to have a strong Q2. And we said, whoever makes 100%, we're going to give you a bunch of extra cash for it. And it was significant extra cash. And what I did at the time, and this is important, I think this is where people maybe miss, is what is the expected outcome? Put it in a SMART type goal, right? Get a number to it. So for us, we counted how many people, before we announced the contest, how many people were slotted to hit 100% anyway. It was like, like 20%, let's call it. And we had a count though, like the let's call it 52 reps, right? We're supposed to get to 100%. And we said it would be great if we had 60 get to 100, right? Even if we make an impact, plus we know we're already going to pay those 52, right? Because they're going to hit it anyway. We're not going to exclude them. Had some reservations, risks were made known, but it doesn't matter. Let's get it going. And we did. And 48 hit quota, and not 52 and not 60. So we paid out a bunch of money, right, for not a significant amount of benefit. Now, what helped with that is, again, at the start of it, create your stake in the ground, start the baseline, figure out what ROI is going to mean for a spiff. The good example of that is, I don't know how many of you on the orgs do something like March Madness. If you're on a current fiscal year, it's really to get the quarter going, usually a pipeline type led incentive. And we had never done more than X, right, in any kind of pipeline contest or launch. The other thing that I want to call out is don't underestimate the power of non-monetary incentives. Monetary incentives are great, but they have a comp plan to accomplish that. These are type A folks, competitive team players. The idea of getting a fancy watch, getting a fancy pair of sunglasses, eating dinner with the CEO, those all bring about massive behavior. So we put a contest like that in place. Instead of getting X pipeline, we ended up getting almost, it was about 30% more, a whole third more in pipeline buildup. We had never done that in company history. And not only did we do it, we had meetings and meetings and meetings ahead of time about safeguards, how to make sure they don't game that. What can we do in our CRM to make sure that we're not getting bad pipeline data in? Rules around eligibility, right? I didn't want somebody who was here for a week to get that, or somebody who leaves mid-quarter to get it. We had all these planning sessions. So net, have multiple conversations before deciding on a spiff, even though that product person is super like, hey, get this spiff out, give them extra quarter credit, give them extra Pres Club. Have those guardrails and baselines set up at the forefront. And that way you can negate your risks, avoid the unnecessary gaming, and get an outcome that you want, or it's a lesson learned, right? You move on and you don't repeat that mistake again with a spiff.
Yeah. I mean, and what I see all the time is, and what we see is like, you have all this effort that goes into designing this spiff structure as an example. And then the next year or 2 years later, you're redesigning the exact same thing from scratch versus like thinking about this as like, it's a playbook and it's an ongoing motion. And you build this is one play in our playbook. And when we need to roll this out, these are the assumptions that need to be true. This is the criteria. This is the expectation for outputs, and this is how we're going to measure it. And there's this concept of like learning from mistakes is very, very valuable, right? And you could run that spiff in that example with the hypothetical 48 versus 52 outcome instead of the 60. I mean, if you walk away from that and you don't learn anything and update your playbook, then it truly is a cost. But if it actually updates the playbook, you could argue now you're building an IP asset within your sales and go-to-market motion that is going to help you hit better numbers in the future and kind of scale. So I think there's, I'm aligned with everything you said. It's just, how do you take that and kind of like build it into an ongoing motion that it just enables your sales org to operate even more agility.
The other thing with that is like the successes that come from that, champion them. So I've been parts of organizations that do this well and some that don't do it well. You need to have champions around these initiatives, around when your comp plan has a win, around when your incentive programs have a win, have dashboards, have presentations, have the CRO champion these in meetings, because again, in this remote world that we're living in, right, where some of the orgs are still fully remote, some aren't, it's a mix. Your sellers are type A. They are looking for a competitive streak. They want to see their name at the top of the list, or, it's a bad list at the bottom of the list. They want to see their name up in lights. And it's amazing what just having one thing that, I wanted to change here at Workiva is we would throw up logos, and logos are great, but they didn't have the rep attached to them. So just that little change, right, of recognition, right? Hey, that's an awesome logo. We're going to attach the name to it. It's amazing what those little bits of recognition do for morale, for momentum. The other thing it does is it gives other sellers saying, hey, I wonder what they did, right? So we go back to metrics. I wonder what they're doing different than I am. I can win reports all day, but maybe I can compare these things that I'm in the orange on because I have a performance dashboard and I have it in real time at our org. And I can dive in with this person at some jam sessions, like, how come you're in the green? How can I fix that? Right. And they look to them as a role model. So it feeds off each other. Recognition feeds and helps other people forward.
100%. And I think like if you break it up at a recognition at an individual level, at a team level, and at a company level, like for example, a rep doing a record sale for themselves. This is the first time they passed the 100K ACV and a single deal. Like these are moments like, you know, I actually posted about this earlier this week on on LinkedIn, but it's like those are fleeting moments that if you don't capture that ego hit, right? Like if you think about what drives salespeople, it's the ego and the competitive nature, and then the financial reward. And if you don't leverage that, I think you're missing opportunity. And then like the team and leveraging peers against one another. I mean, this is kind of Psych 101 of like where you place against your peer group in that competitive nature. And then at a company level, I think it goes beyond just the sales team. So recognizing that a single win is not just a sales team driven thing. It's how we execute and support customers on an ongoing basis, how we develop product.
Right.
The recognition can go way beyond the sales team, and it's something that you have to bake into your rewards program effectively, because it's anyways.
And
Well,
I just wanted to follow up on two things. So I don't want to make this a conversation specifically about SPIFs, but I think, Maria, your comments about ROI measurement were excellent. And I just want to ask a follow-up question in terms of, you're talking about making this prediction of how we're going to perform if we don't run this SPIF. Do you see any issues with kind of the year-over-year SPIFs where kind of, a company, as an example, is running, let's say they have a SPIF on early renewals and we want to pull forward early renewals. Well, you run that year one, you run it year two, all of a sudden, how do you measure the ROI if you run that again, right?
It's not a spiff, and that should have been part of your comp plan. That's too long.
Yeah, if you're doing it repeating, and if you're repeating the spiff, then it probably should be one of your core components to the plan, right? But yes.
Yeah, I mean that at the end of the day, right? If you have repeating spiffs that are maybe similar in nature, maybe you run something around pipeline, right, consistently, or a new product or whatever it is. I mean, the idea is the rules don't really change, right? You need to have somebody somewhere is getting paid on the success of that motion. And so however that looks like does need to tie in, because that's when you create some friction, I'd say, right? So we had this example about a year ago or maybe 2 years ago where product really wanted to push momentum on X product. And I'm sitting here like, man, my favorite question to ask sellers is, if I gave you $1 million tomorrow to sell something in this way, would I pay you out? And 99% of the time they go, nope. Let me tell you all the problems with me trying to sell product X, right? And they give you a laundry list, and you realize comp has nothing to do with it.
Exactly.
And so what we did is we kind of had that moment where we said, look, if we launch this, it just creates the wrong message. It means take away attention from this product, which we don't want. Focus on this product, which is not making the impact we want or need right now. It's an auxiliary product. So it's great, right? But it's not where we want the focus. And we avoided doing that. But in the past where we didn't, you get the friction and you get the distraction. And now reps don't know really what to focus on, or what's the company saying versus what product's telling me versus what marketing's telling me. So in these roles, I think Jeff can relate. We sort of play therapist to all of this. we try to get everybody right, kind of beating to the same drum. But it's a balance. And so I'd say, David, like, don't create friction with whatever those rollover spiffs are, and make sure you still have the expected success. It's okay. You roll them over, you're guilty, it's fine. But are you continuing to get the ROI you expect? And that needs to be updated every time you run that spiff.
Great. Okay, I think we've actually touched on the next topic that I want to talk about was blind spots and kind of unintended behaviors from reps. So we actually covered that, I think, a great deal through some of your examples. So now that we've kind of gone through the core metrics that we're measuring, how we use those to change our incentives, kind of mitigating against these unintended behaviors, I want to talk about next and ask you guys, how do you put all these things together into kind of one? Is it processes? Is it people? Is it tools? How do you put this together in a way that you can operationalize this and actually scale it in real time? And maybe Jeff, we can start with you.
Yeah, I can go first. My perspective is first is start simple, right? You're not trying to boil the ocean here. Begin with a handful of core metrics that, as we discussed a little bit earlier, tie to the company strategy. the sales comp plan and seller performance should tie back to the company strategy. And there's no need to get too creative just yet. Before committing to your set of core metrics, be sure that you can support these. Make sure that you can support them, that you can support them consistently, reliably, accurately, and make sure that people know what they're looking at, and that they can understand how these core metrics illustrate that connection between what we're asking our sellers to do and what the company wants from these folks. Are there deviations that we ought to be aware of? Are we getting what we paid for? Are we paying too much? Are we paying too little? Are we spending money in the right areas? It was one of the points that Maria brought up a little while ago. Are we spending the money in the areas that drive the seller behavior in support of the company strategy? These metrics should inform those and related questions. So for me, just start simple, make sure you can do them, make sure that people know what they're looking at, make sure that they tie to the strategy, and from that point on, I mean, you can certainly grow and expand on these, but for me, start simple and grow from there. That would be my advice.
And I think Jeff highlights that, and the people that need to see it is probably where I'll hone in on a bit. I think sellers should know what matters to everybody, all the way from their level all the way up. And I think where we have a miss in general is that we hold this analysis and this performance analysis and these conversations with the VPs and up, everybody else in the company, and the sellers come the end of the year, they're like, wait, what did I do wrong? I'm not sure, my attainment's high, so why are you saying I didn't hit my mark? And so one thing that we're launching at Workiva here in the next few weeks is we have, for a while now, we do have an SPM tool, we have a forecast tool, so it does send signals. It can show it gives managers a coaching dashboard, which presents a lot of stats, and they can have those honest conversations with reps every week. So there's no surprises on metrics and selling, motions and velocity and attainment. But we're actually combining a couple of things there going forward here in the next few weeks. So on our, kind of our BI tool platform, they are going to, in real time at any time, be able to see if they're an individual contributor, their information all the way up. Key metrics that we said, hey, we know there's 30 metrics you could look at, but these are the 5 that we care about for this year. So we care about attainment, we care about ADS, we care about win rate, we care about forecast submission if you're an IC, accuracy if you're a manager. Long story behind that, but that's where we're at. And then there's a last piece there. We care about your commitment to our company values, because we have found that reps can be really great in attainment and numbers, but we have a problem with some that don't align to company values, right? And those can be your egomaniacs on the team, the people that just aren't playing ball right, they're maybe disrespectful. We like to think we don't have a lot of those, but the problems present itself, and it's like, how can I let this star rep go? But they're such a jerk. They don't work with anybody, and they're causing a lot of problems. So we actually, all those metrics, we're putting in a weighted average view, and reps will be able to instantly have those, right? Some metrics update live every day, some you have to wait till the end of the month. But we think this is that last piece, because again, what's been happening is end of the year comes, performance reviews happen, sales hates it because they're trying to close out a year, HR is all on them, right? Like get it into Workday. And they're having to start from scratch. So what this does is it gives a playbook every month. You have that same view, that same performance scorecard, and you're able to focus on the metrics. The definitions are communicated, how it's in use is communicated, and come the end of the year, the managers shouldn't have a problem, right? They're just looking at those averages, pop that score in. Otherwise, right, likewise, the reps also shouldn't be surprised. And so that is my ideal state, is that these conversations happen at the rep level, and that we aren't the only ones, being in the circle of performance and comp review, aren't the only ones that know what's going on and where there's potential gaps.
Yeah, I think this, David, I think this is one of the topics that we were going to kind of bleed into, and so I'm going to maybe get us there a little quicker. Look, how do you communicate these insights to leadership, right? With most of today's incentive compensation or sales performance management tools and the host of other analytics and insights tools that are available to us, it's not really a matter of how to best share these insights with leadership, right? We've talked about what to share already, and so the how doesn't become all that difficult. For me, it's making sure that these insights that we share with leadership are not left with leadership alone. I think this is where you were going with that, Maria. Like with few exceptions, sales performance insights, analytics, metrics, they should be shared across the sales organization. Like, why should leaders have the exclusive on these things? After leadership has had an opportunity to review everything, why not push these things all the way down to the first line manager level, even to the IC level? Like, this is where the one-on-one coaching takes place. This is where the seller influence of the customer takes place. These managers ought to know what the leadership knows. We're seeing this behavior, which is in line with what we wanted. Keep it up. Or we're not certain our sellers are moving in the right direction, or at least not in the way that the plan intended. Like, can we identify why that might be? Again, these skills, territory, tenure, product readiness, customer profile, et cetera, whatever it is, the bottom line, whatever insights we've decided are important for the leadership to know, they're probably important for the rest of the organization to know, and we should push these insights down through the organizational hierarchy.
At the end of the day, how can you tell a seller they're not doing their job when
I didn't know.
hit an attainment goal and they think they've done their job because that's all you told them they have to worry about? So
Right.
that's always my conundrum, right? Is I can get mad at my sellers, but did I actually tell them to do something different or not? The other thing too is just the camaraderie of like being in a tough spot, right? We all know when companies go through lulls, you as a seller should feel like, hey, I'm not the only one going through this. So our sellers all have visibility to where they sit in attainment amongst the entire pool of the company. They can't see quota and they can't see credit against that quota, but they can see where they are, in the stack. I think that's important because you're like, hey, look, all my peers are here, right? We know we're having a product problem. There's a territory problem. Everybody's here with me. I'm not at the bottom of the list by myself, right? The company knows there's an issue. We're working through it. So I don't feel like my job is at risk because I'm in the same boat as everybody else. Or, hey, if I'm part of a rock star crew, better get those numbers up, right? I'm at the bottom. Everybody else is feeling it.
Someone's at my heels.
I'm
Yeah.
definitely a laggard there, right? So I think it can empower, right, and motivate in the right way. So I'm a firm believer in ICs all the way up.
Yeah. I mean, I think like your quote on the importance piece for sure. Like, you need to hone it in and like filter into a select few that you disseminate to the rest of the org. But maybe just the one thing I'm curious what your thoughts are on this is like the more senior you get in the organization, the longer time span that they're acting on. And so the time, the time aspect of this is different. So like, as you go more senior in an organization, certain KPIs might be more relevant, like long-term customer satisfaction and retention could be both a seller thing in terms of like, okay, are sales reps, making certain commitments that don't in fact, get delivered, and that's what's resulting in churn, or is it purely product or market dynamics? And so those are relevant more at the longer term. So I think like and when I've seen this done well is like creating an analytics framework that has different KPIs measuring different time periods. So right in the 3 to 5 year time period, kind of filtering those top like few that matter a lot, especially if there's a directional change that's coming up in the business where, okay, we know that the strategy is shifting and what matters today to the sales organization is going to be different because we can't expect them to do those behaviors. But over time, we're kind of shifting to this future. But I agree, what's relevant in anything that's relevant to this organization, the more that you can empower them to understand and see. And especially so if you plan on making a comp change in the following year or 2 years where you're changing the metrics that you're tracking the reps, giving them visibility to that early so they're acclimated with that metric before you ever change the definition of their comp plan, I think is really impactful. And then I couldn't agree more on the point of the no jerks type of model and kind of building that into tracking. Because at the end of the day, you could hit attainment, but most sales organizations sell in a team sport type fashion at some level. Yes, you're individual, but you're quarterbacking a deal. You're bringing the appropriate people to the table, and it sends a very wrong message and has longer term negative consequences most of the times. So
yeah.
We covered a good amount of kind of the communication downwards. Can I press you guys a little bit on the upward communication? Like, how are you gathering all this data, all these metrics? Like Jeff, to your point, are you showing a bunch of distribution curves to the CRO? to the executive level? Like, what does it look like? What does the cadence look like? And what are you actually showing and communicating?
From my side, again, I'm not going to expand on everything that's shared, but there is that core group, and yes, that is the CRO, CFO, your whatever the composition of your sales governance committee, right? These are your sales leader. This could be at times throughout the year, even your CEO, but certainly your CRO, your CFO, your COO, other HR and business leaders that are part of that. You want to show them this is how we're performing against the plan, right? And then you can dissect that and say, look, this is the performance distribution by sales segment, right? We've got a great looking curve across the board, but it's because, if you parse out the enterprise folks, they're way off here, right? They're hitting it out of the park. They're either that great or we had a miss on the quota. Whereas this other group of folks, they're sitting down here at the bottom tier, and maybe we ought to evaluate whether or not we've got the job function scoped quite right for them. Where are the dollars going, right? This is the classic one. I think Maria mentioned this. I want to know what percentage of quota you're at and how that ties to the quota of target incentive for it. You often see lots of reps going home with their pockets full, right? They're happy, but the company misses the mark when it comes to some of its key metrics, whether it's revenue, whether it's bookings, ACV, TCV, whatever it is that you use to drive your business. You think, how is it that we're paying out, but we're not getting, right? Well, maybe some of these other campaigns or programs are being exploited and they're fine getting their money another way, right? Those are the types of things at the top that I think the business needs to understand, right? Again, it comes back to that statement I made. What are we paying, and are we getting what we expected for what we're paying? And if we're not, why not? Okay, is it because of us the plan just didn't work and we introduced some elements that weren't driving the right behavior, or did we have some kickers in there that are being exploited? May not be the right word, but maybe we underestimated the impact that they might have, and now we're paying a ton of money and not really getting the commensurate amount of performance to tie to it. So it's a core group for me. Those metrics at that point become nice to know if you're an individual contributor. They want to know how they're performing, and I think to Maria's point, they want to know how they're performing against their peers, right? And that helps as a manager know where I should spend some of my time and effort coaching a particular individual, where they may not be up to par with some of their seller skills. That's my 2 cents on that piece of it. I'm not sure that answered your question or not, but I'm happy to turn it over to others on the panel here for additional insights there.
I mean, the interesting thing with comp specifically is it's both emotionally charged and politically charged. So you end up, and I had a roundtable with some sales comp leaders just a couple of days ago, and we were actually talking about this. So it's very top of mind of like the best way to deflate or like remove the political and the emotional part of it is to just speak data and let the data do the talking for you. And I think, to me, it's, you kind of get this conundrum of like sales is supposed to be very data driven, and it is about building this massive machine for most organizations of like, a revenue engine. But you get, sales leaders that have, played this playbook for years, if not decades, and changing that behavior, changing that mindset sometimes is not easy, and actually coming to the table with data presented in a way that can be understood very quickly and easily it's a hard thing to do, right? Like you can be the best data scientist in the world, but conveying that information in a way that's understood by the average person who has a million other things and they're kind of context switching to that meeting is not easy. But if you can do that and serve up the as simple of a data output as possible to convey the point that you're trying to convey, so that you don't make it about emotion. And if you need to take a rebuttal or kind of I want to say not a dispute, but effectively a rejection of the data you're presenting, if you need to take that back and kind of go rework it to come present the data, you're better off than trying to make it or go down the rabbit hole of making it an emotional conversation.
Yeah, I'll add one more thing to that is shape it to the audience. So I came in, you know, not that I know everything around comp or what works or what doesn't, but I know, you know, enough, I think, to rinse and repeat a few times. But not everybody has that level of understanding. Not everybody cares about those things, right? Who cares that a seller is waiting extra time to get something resolved? Who cares that we spend an extra 10%, right? Well, the CFO might care, the CRO might not care. So now, right, whatever stats, metrics you're giving, cater them to the audience that's receiving them. So I agree, simplicity, to the point, lay out the risks, but you do need to cater that to the audience, because my message and the things that I focus on in a one-on-one with CRO is different than the CFO is different than, right, the person managing stocks is different than 20 other people that I'm dealing with. So, or that I'm working with. So that's kind of my end piece there, right? Is cater it to the audience. That's very important. If you don't know and you're throwing out, again, a generic book of metrics at the end of the month or quarter, it's like, where am I supposed to look? All right, there's 30 things here. Try to cater it to your audience, right? At least make a couple sections, groupings of data and information that you know those people care about, and then create the story for them. The worst thing that I can do is just pass off some data and say, well, what do you think? Like, no, Maria, tell me what you think. Tell me what the risks are. Tell me what I'm not seeing, and then I'll tell you something else, right, that I might not be seeing or agree or whatnot. So those pieces are all fundamental.
All right, so we're coming to the end of the discussion today. There are a couple questions that came through the Q&A that I wanted to ask the panel and pose to you guys. So number one, I think, is directed towards Jeff, and the comment you made a little bit earlier about kind of your special advisory committee. You know, there's a question around, how do you balance the potential risk of a panelist feeling like they have decision-making powers, and maybe avoid them becoming an inadvertent detractor of the plan?
For me, it was actually fairly simple. You publish a document, right? This is the scope of this panel. This is your role. This is, you know, your role as a participant in this at the sales or manager level that has been invited to this. This is my role as someone chairing this council. This is kind of what we're looking for from you, and the expectation in terms of your contribution and commitment in terms of timing and whatnot. It actually says in this document, understand that this is not a decision-making authority. We have a sales comp governance committee, but the ideas presented here will be used. And there are going to be questions from the sales comp governance committee that we will likely push down for discussion amongst this broader group, and we can take those back up. But I think just setting the expectation right up front. Look, you don't have decision-making authority here. These plans are not owned by this audience. They're owned by that audience. But we want to make sure that we don't go too far off, right? The worst thing you can do, and Maria had pointed this a little bit earlier, is to develop something in a silo and then just throw it over the fence and just say, this is what we came up with. We have no idea whether or not this works with how you engage your customers in the sales motion and X, Y, and Z, but it really doesn't matter. This is kind of what we thought was going to work, and take it or leave it. Whereas if you leverage this field advisory council, you're getting some feedback, and not just feedback on new plan design, but how do you think the plan is working, right? And if you've got some folks, and usually this is by appointment, meaning you've asked your senior sales leaders to assign one or two people from their teams to collectively end up with this quorum that you have. They're not just pure sellers in this forum, right? Think about, we want to make sure that we represent the sales organization well, and we're happy to pay well for the right performance. But I also want you to think as business leaders, right? Be open and honest and tell us, this part of the plan stinks, right? I have been in discussions where sales participants in this have said, I think we're gaming the plan in a way that was unintended. Like, I'm seeing a couple of people on my team interpret and behave in this way, and I don't think that's what you wanted, right? And others would be like, yep, seeing the same thing, right? They're open and honest. And at some point in time, you find yourself more the fly on the wall as this discussion happens amongst them, and you're just picking out the pieces and parts that you can use later. But I guess to answer the original question, you're just upfront and honest with them. Look, you're here to bounce ideas off of and to provide some of your knowledge and insights to help us solve some of these problems that we are going to experience, and ideally to become champions for this plan when we roll it out. But just because you've come up with a great idea doesn't mean that it's going to find its way into the plan. That's really not our purview here. That's theirs.
I think too, what I found through my career is there are some organizations, you know, like Workiva really put this into a department and ownership, right? I own these activities at Workiva. I get buy-in from my boss, right? I'm in the sales org or the rev ops org, and we bring along the other C-suite members. But how do you do that? If you have that same workup, you know, for me, I do develop things with the closest to me, right? So sales, myself, a good relationship with HR. However, those ideas get echoed early. So once we think we're landing on a general blueprint, again, I send out those customized emails or have my normal one-on-ones with the rest of the C-suite. And that's anybody from marketing to finance to HR to product, because I want them to understand how what they're doing is going to tie in or not and catch those red flags and risks. Then everybody is invited to the actual rollout, right, of changes in comp plans. So that audience is open. If you like to join that call, great, because again, you're bringing everybody along. And sometimes if I can't catch, you know, C-suite's a little bit big, like you have multiple personas. If you can't catch them, they at least hear it there and can circle back with you on any concerns. If you don't have that decision-making central powerhouse, then it's really important to make sure that you become, and my CSO says this, the favorite no person. Like I'm everybody's favorite no person, right? Because I say no with data, Nabil, to what you mentioned, right? The no comes from data, from experience, and the risks are outlined and the potential benefits are outlined. And so if you have to say no, you present that and you echo it up. You also need to make sure within your organization, you have a champion that's willing to do that. I'm fortunate, right? Where I'm at, I have that champion. My ideas are met with, you know, support most of the time, and that is championed up to people who might be in other people's ear being naysayers or influence. So you always need that next champion, and that goes all the way to the CEO for me, right? So the CEO will agree on something that I've agreed on, and then all of a sudden somebody else from the executive committee comes up with an issue, and then we can both tackle it, right? We both have a story, we're both aligned, we both approve. So you need champions regardless of whether you own this function or not. And it's really important to be able to become that group's favorite no person in my mind when it comes to crazy ideas around sales comp.
Great. Well, we're at the top of the hour. I wanted to thank all three of you, Maria, Jeff, and Nabil, for joining today, and thank everyone for attending. It was a great discussion. I just wanted to piggyback on a note from Britt at the beginning of the call that there is that SPM Pulse survey that she has now dropped into the chat. It's really quick, less than 5 minutes. We'd love for you guys to take it. The results will be anonymized. Again, thank you all for coming. And please join one of these sessions in the future. It was a great call. Thank you. Have a great day, everyone.
Thanks, Jeff. Thanks, Maria. Thanks, everyone.
Bye.